Good afternoon, everyone. My name is Lavine Hemlani, as I mentioned before. I'm the founder and CEO of Accelerate. We are a leading ed tech company that works with financial services institutions, governments, and societies at large to impart fourth industrial revolution skills. In the past 3.5 years, we've upskilled and reskilled 10,000 people across a variety of different professionals, preparing them for the future. A big part of what we are focused on is helping the financial services industry be ready for the future. With all the change that's happening, we see upskilling, reskilling, and education as a really important pillar to help Hong Kong as a city be ready for the future. And now, it's my absolute honor and pleasure to invite our two guests to give us a little introduction. Avril, could you please tell us a little bit about yourself?
Yeah, thanks, Lavine. Hi, I'm Avril Ray. I've been in technology for more than 20 years and things have changed a lot in that time, mostly supporting the financial services industry in roles such as vendors, providing data, infrastructure services, cloud, managed services. And most recently, I was head of fintech at one of the big four.
Fantastic. Thank you, Avril. Emil, could you give us a little background on who you are?
Yeah, I am an old banker. Okay, I joined the industry around 30 years ago. I lost my job during the last financial crisis when the bank decided to move away from Asia. So I was the head of IT in the Asia Pacific. So since then, I decided not to work for the sizable company. The large job I worked last 17 years. I thought I retired, from the former state-owned bank. And now I transform myself with two major jobs or part-time jobs. The first one is being the lecturer, and I'm now the EMBA adjunct professor of City University. And I'm also mentors for a series for multiple fintech startups in Hong Kong. So that's me, and I'm trying to transform the rather slow-moving Hong Kong traditional financial industry. So that's me.
Fantastic. Great. So
maybe
before
I
I
should
begin,
add that I also mentor a fintech in Hong Kong, and I'm working with two technology providers at the moment since losing my job as well, Emil, due to COVID. So, I think it is very important to transform and stay on top of what's happening. And I'm lucky enough to be representing two different technology companies at the moment in the areas of chip-to-chain blockchain technology, digital wallets and cold storage, as well as identity management and blockchain, predominantly working with traditional databases onto blockchain.
Beautiful.
Fantastic. Great. So I'm sure we have loads of things to talk about. And before we begin, to all the audience, at any point, please feel free to ask questions in the chat. I will try and integrate your questions into the conversation flow. If it doesn't make sense, then in about 40 minutes, we'll wrap up the group Q&A. And we'll open to individual Q&A. So please don't be shy. This is very conversational. We find it's best when everyone participates and asks very engaging question and allows for all of us to learn something and also meet new people. A copy of this video will be recorded and put on the Accelerate YouTube channel if you'd like to peruse this at a later date. Again, please feel free to ask questions in the chat at any point, and in 40 minutes, we will start with a more individualized Q&A. So, as someone who started their career in financial services, one of the main questions I have for both of you is, why is it so hard to change? Why do we have to fall under this situation to begin with? Either of you can begin.
I don't mind going first. When I first started work more than 20 years ago, there was a lot of legacy infrastructure, mainframes and architecture, and the banks have been using this legacy infrastructure, and the whole banking system has been built upon a very old, database structure, and things have changed. And also the way the banks operate has been very much within themselves. So they, you know, have an institution, and they very much do everything themselves. And now things are changing in terms of ecosystems and partnerships and new technology and cloud. And so all of these things, you know, it takes time for those things to change. And it's because, you know, the whole banking system has been built a very long time ago, and things have since changed. Maybe Emil can.
Yeah, I fully agree with it. Don't you believe it? You know, the first few jobs or projects I did are still running, like Swift. You know, I installed Swift, you know, by myself, and I set up the whole infrastructure, and it is still running the same Swift with the similar, you know, more or less the same machines, and also RTGS, okay, real-time gross settlement system in Hong Kong. It's still the same real-time gross settlement system. So if it is running, it is bulletproof. Why change, right? So that's why we are still using a paper check rather than the faster payment system that already introduced a few years back. When we receive our paycheck, it's still the same paycheck. It's printed. Why? Because not only the infrastructure are not changing, the way how we do business is still the same. And to the worst, the new system being introduced in the financial industry are not up to the standard that we are expecting. So why? Because the regulator are structured in the old way. So each regulator has their own area. HKMA only supervising banks, IA only supervising insurance. So when the new products or services come into the picture, we cannot chop them down into pieces and rebuild. It is still HKMA, it is still the SFC. So the regulation cannot be changed or consolidate. So that's why it's very hard to change on policy-wise, on the mainframe-wise, and process-wise.
I think it takes time for the regulator to change. I think they have changed in some respects, and there are regulators around the world that have, you know, good, you know, advances.
We appreciate that.
But the technology moves faster than they can.
But they
That's
cannot
the trouble.
get married. They cannot get married and have the offspring. That's the problem. So how animals or the creature can prolong or last long? They get married and have the offspring. But in Hong Kong, they are independent. So when blockchain or Bitcoin is into the picture, who is the regulator? Nobody is the regulator. And all of a sudden, everybody is the regulator because there is no such a policy across the supervisory bodies. So when we are a startup, there are 3 sandboxes. So who am I? I don't know who am I. You don't know who am I. And then which sandbox I have to join? I really don't know. So that's the problem, particularly happening in Hong Kong.
Got it. And when you look at from a top down, some large entities that are struggling to change, and they're surrounded by these fast moving startups that are just blazing through when it comes to virtual banks, to new ways of doing robo-advisory. What do you think goes on? I'm sure some of you have worked at very large banks. Like, what do you think goes on when they look at this change? And clearly, it's not a knowledge gap, right? We all know that this industry, even myself, I used to work in investment banking, was very clear that certain individuals or certain applications, certain technologies are happening. So imagine if we're inside a large financial services institution. What do you think are some of the conversations that goes on when they think about staying relevant and staying future-proofed?
Actually, if I may go first, I used to talk about this in terms of how technology has moved from the basement to the boardroom. So when I first started work, most organizations, the technology was an afterthought and was very much the engineers in the basement who you never saw. And, you know, they would work night shifts and supporting, you know, infrastructure and services. But now suddenly technology has gone from the basement of the organization to the boardroom. And so now the CEOs are all sitting around a table and they're all wondering why their peers have a head of data science and they don't have a head of data science, why they might not have a head of API platform development. Should they have a head of platform development? What is an API? You know, all of these questions are now being discussed at a board level. And so now the decisions are being made to either, you know, retrain from within or, you know, hire in new resource to try and keep up with all of this change.
Yeah, yeah. But this is not easy because there will be a conflict and gray area on the policies. So the no headcount or no experience. So the other form is that there are two way out. The first one is, as you see, the sizable company usually have a accelerator program. So they raise their own kids. So that test the water, and if it work out well, then adopted them. Or the other way is that they acquire small companies. So rather than changing the working mechanism, it is rather risky to change it. So rather than change it, they buy out companies. If they are large enough and they are brave enough, if there's a good policy that can accept failure, then those companies like Alibaba, like DBS, okay, then they are taking the lead. On the other hand, you know, those traditional company, then they will suffer. I bit worry about, you know, the smaller size traditional banks in Hong Kong, or the brokers, or the insurance company, because they do not have that culture. So youngsters, you know, in order to help them or help the environment, I think we have to showcase our product and or services, so that the medium-sized company, they still play an important role in the ecosystem. So if they all die out, then they will be replaced by the external competitors. And I don't think it is healthy.
Yeah. And also I think for small to medium-sized businesses, you know, cloud technology, access to AI platforms, it's all becoming as a service and it's all becoming much more accessible. So I think it's taken time, you know, the likes of the big American investment banks, they've been investing in cloud and all of this stuff for many, many years. And they've seen, you know, significant cost savings in operations, for example. But some of the other players haven't had the resource to do this, or even the CapEx or OpEx to go and do this kind of transformation work. It's now becoming much more cost effective and accessible. And I think the cloud providers have done tremendously well to make it more accessible for financial services. So much so that they're even, you know, Google, AWS, Amazon, all of these main cloud providers, they all work with the regulators to help the financial services industry understand what is possible and how it can be, how the data can be secure and segregated, and, you know, making sure that the traditional financial companies are confident in the security parameters. I think particularly in Hong Kong, you know, I used to try and sell, you know, software as a service to many traditional companies, and they were all hiding behind security and regulation as the two main showstoppers, right? But, you know, with the advent of these virtual banks, we can now see that it is possible to have, you know, a core banking system in the cloud. It is possible to open bank accounts without seeing someone face to face. And so that should give confidence to, you know, some smaller financial players to actually make that move. And it is much easier now. And from a security perspective, you can't possibly say that, you know, an individual IT person that you hire is going to have the same knowledge and capability as some of these huge, gigantic cloud providers who spend, you know, millions on R&D every year, who understand security way better than one individual, and who are able to keep up to date with security patches and new threats that may come in the cyber world. So, you know, these you know, cloud vendors are much better equipped from a security perspective. So that's no longer a roadblocker either. So I think, you know, once you remove the regulatory misconception, and you remove the concerns about security. And once they understand where their data is, how it's being stored, how they can access it, who has access to it, all of these things, then it becomes much, much more appealing.
Yeah, this is the time. I think 10 years ago or 5 years ago, if you talk about moving to onto the cloud, there's no driver on the, not much driving force. But now the conventional system, the service provider, they are stop servicing them. So if you have a machine that is 20 years old or 10 years old, the maintenance fee can be so high. And then particularly Hong Kong now, because of the friction between China and USA, a lot of servicing company, they are moving away from Hong Kong. So if we do not have the engineer on locally, then the old machine cannot be maintained well. So if the machine start to break down, the only way out is not to fix it. The only way out is to adopt the cloud technology, because it doesn't matter whether the engineer is on site or off site. It is off site anyhow. Yeah.
Got it. So I like to think about businesses, large and small, in 4 core ingredients, right? There's people, there's strategy, there's execution, and there's cash/business models, right? These are the 4 components, mental models. I mean, one can argue a lot of different ways, the McKinsey way, the HBS way, but in general, there are 3 or 4 major components to any business to be successful: people, strategy, execution of that strategy, and of course, a viable business model that brings in cash flow. Out of these 4 areas, how do you kind of perceive the challenges? What are the biggest challenges amongst these 4 areas for some of the largest players in Hong Kong when it comes to innovation, with areas like cloud, with areas like AI, with areas like regtech, fintech, and every other thing you can think of by adding the word tech behind it? How do you guys view these 4 ingredients, and what are the choke points when you think about these 4 ingredients to financial services industry in Hong Kong?
Well, let me start first, because I have too many experience, how to transform bad experience, how to transform something. And then I always use an analog. You see, this Australian Open. So I'm a keen tennis player. So when I start playing tennis, I use Eastern grip, okay, and wooden racket. No matter how good I cannot play the modern style. The way how we hit, so fast and with the wrist action. So if the old dogs like me now have to learn the new form of tennis with the new racket, lighter racket or a larger racket size, then it's always a process. So out of the 4 area, every single investment, it takes time to retrain the process or the execution or to redo everything. So the bank mostly do not want to reinvest or to train the system from scratch. So they are holding the Eastern grip with the modern tennis racket. You can see how awful it can be. So when the 4 factors are all into the picture, the hardest thing in my eyes is that they are reluctant to break down everything and redo it from scratch. So if they continue that way, and it will go even worse rather than improving. So once they are using this funny form factor or funny way to play that game, they will stop everything in the future, because it's harder to play the game in such a way. So I think the only way out is still they rather than changing everything from scratch, they have to have a strategy. How to break down the complex system into small modules, and they tackle one by one. And I can't see any many good projects doing that way. And whenever they launch something out, they have a big bang way. And when the largest bank in Hong Kong roll out the payment wallets, they roll out in one piece, big bang, and then it collapsed. So this is how I see, the problem, and they cannot work together, the four factors.
Great, yeah, I agree. I've had a chance to think of some words to go next to your words, Lavine. So people, I would say culture is probably the biggest bottleneck. It's hard to change people. The people who naturally are interested in technology and who go to conferences and who keep themselves up to date and who, regularly, upskill, they're not the ones that you need to change. It's the people that have been doing the same job for many, many years, the same way. And, culture is a hard one, is a hard nut to crack. So for me, people, the roadblocker is culture typically. For strategy, quite similar to Emil, I think leadership. The strategy, you need to have a strong leadership and also a willingness to change. So if you've got somebody at the helm who is a few years from retiring, that bank or that financial organization is not going to undertake a massive change, right? They want to leave on a high. They don't want to, have the potential headache of, a massive transformation. So depending on the status of the leadership, how close they are to retirement, whether they're going to be leaving anytime soon. I think the financial institutions that have had a change in management and they have people in prominent positions who have something to prove, who've been hired to make a difference, that leadership really makes a difference. For execution, it's probably about funding. So, how do you do this? Do you make shortcuts, or do you, look for the best way of doing something? Do you outsource it, or do you try and do it internally? So I think for execution, it's all about funding. And for me, the business model, the biggest thing is about interoperability, because you could change one thing, but then it will stop working with something else. So interoperability is quite important, particularly when you're trying to bring in a new change, because unlike the past where everything used to operate in silos, typically in the major banks, the different departments never used to speak to each other, and that's why you have multiple databases of client information and all of that good stuff. But now it's quickly being realized that you need a data lake, and you need access, and you need golden source copies, and you need that interoperability. So for me, doing any kind of change actually means that you have to start from the ground up. You can't just pick one area that you want to focus on. To do it right, it takes a lot of work at the ground level.
Got it. Now, these are all very fascinating topics, and one can spend a lot of time going into all of these. When you both think about culture and change, do you think the way forward to future-proof the financial services industries is incremental? This is a large, audacious mission, and we should have accelerator and try and incrementally improve, one process at a time with RPA, one process at a time with AI? Or do you think what's necessary is more of a radical rethinking, radical leadership to discontinue business units or to out-innovate entire business units in order to stay relevant and ready for the future?
I think both. You cannot just take one side. You have to keep at least upgrading your operating system. When there's a patch, you have to patch it, right? And then, to one point, like me, I switched from Microsoft to Mac OS after I left the bank, because this is a quantum leap to me. I do not want to spend the time to do the patching. So that's why I do not have the restriction anymore after I left the bank. Then I'm using Mac. But maybe if Apple do not maintain the operating system well, okay, I can see a sign that the development are not at the same pace at the past. I might in one day switch back to Microsoft. Or maybe if the Chinese or the China and US has even a worse relationship. There will be one Chinese system that's cheaper, that's more robust, and built from scratch. Then I will jump over to that one. So that really depends on the availability of technology and the pros and cons. So that in my eyes, you have to patch your system, you have to keep upgrading it as it is, and then on the other hand, make bad decision when the threshold, come over the line.
Yeah, I agree. I mean, unfortunately, as we've discussed, legacy infrastructure used to last a long time, but because technology is moving much faster now, things don't last as long. You could buy a server and it will be no good, 5 years time. So, you have to make changes whilst keeping the lights on, but you also need to be aware that there is no end to this, right? So you could have a lot of money and you could set off on a program of work, and you could have a 12-month roadmap, and you get to the end of the 12 months and you go, I'm done. But then something else has changed. So actually it's a cycle that never ends. And you need to, have that culture where you understand that in order to stay on top and to maintain a good business model that's competitive, you need to continually be looking, what's next, whilst updating what you've got. So yeah, you can start with, small programs of, RPA and, try and, do some smaller things and have an end goal. But even if you manage to do a big bang, which no financial institution would do, that is not the end, because by the time you've finished and executed that program of work, there'll be something else new that is possible, and you have to decide when your appetite is ready to make that next leap. So yeah, things are not changing, things are moving, and things are moving faster than they used to move. Before we know it, we're going to have quantum computing knocking on our door, and it's going to blow a lot of, security processes out the window. And, let's not go there and scare everyone, but, things are moving, and it's exciting, but, it's a big challenge for organizations.
Yeah, let's not talk about qubits and encryption. Qubit's going to destroy that encryption completely. So let's talk a little bit about accountability and responsibility, right? This is a large ecosystem, and that's just in Hong Kong. In Asia, there's places like Singapore, there's London, there's New York. So these are large financial centers of the world. Using Hong Kong as a starting point, who should take responsibility? Whose job is it to be future ready? Is it the banker's job? Is it the IT person's job? Is it the CIO? Is it the CEO? Is it the board? Is it the shareholders? Is it the everyday citizen? Who needs to take responsibility for this? Who needs to take accountability for this? And why haven't they done it already?
I'll let you go first, Emil.
Very heavy, yeah? Well, it's a tricky question, right? So is my bank, in the past, I think around 20 years ago, had a scandal, okay? That some improper transactions were made. The money were lent to one group, same group of people, despite the fact that it's beyond the risk. They did something funny in Malaysia. So at the end, the CEO, the deputy CEO, the CIO, the COO, get repatriated out of Singapore. Okay, so when something happened, it's a group responsibility. Okay, and it's not new. It happened 20 years ago already, or even longer. So the issue is that to solve this problem, how to solve this problem? They are the old way. The old way is to strengthen the policy. Okay. The problem in Hong Kong is that when there's an unresolvable problem, do not take risk. Just do not do that business. It worked in the past because money are everywhere. It's easy to stop one business and focus on the other one. because there are a lot of Chinese tourists, there are a lot of inflow of money, a lot of listing in Hong Kong. But now, the responsibility not to do that business is in the past is valid because lesser risk. So the CEO or the CIO feel happy because CIO said no risk because no transaction. Very, very good. But what if the company at the end of the day collapse because run our business? Then whose responsibility? The CIO technically has to provide a good solution to continue or mitigate the risk with the help of technology, good AI system, good big data application. So on the other hand, under this hard time, I think it is a good moment for the competitive company to play the game with a new style. So rather than punish them, I think there should be a package promoting, or the reward system has to work along well to award those creative staff. So accountability should come with the reward system of two sides. So that's how I look into the problems.
Got it. Avril, would you like to add anything there?
Sure, yeah. I mean, I think it's everybody's responsibility, basically. So, I mean, it's up to the regulators to create the opportunity for innovation and to help organizations understand, you know, what can be possible, and to make sure that they, you know, provide sufficient guidelines to encourage economic development. And it's up to institutions to make sure that, you know, countries are competitive. So, you know, if there was no innovation in Hong Kong, then there would be no business, there would be no jobs. So, you know, these companies need to provide services so that we can remain competitive. And then individuals need to also make sure that they stay up to date, because, you know, as we've said, some of these things are going to change, like RPA will take jobs that are very, you know, easily autonomous. And so you need to be aware of what is possible, not perhaps from a consumer perspective, because you might be happy writing checks, but in terms of working life, if you're working in the financial services sector, you need to ask yourself, is your job, you know, still going to be around in 5 years' time? And if not, then, you know, what skills do you have and how can you transform yourself?
Got it. Emil, when you think about upskilling and reskilling, you know, you've been in the education space for many, many years, and it's quite impressive the number of banks and people within those banks, like Avril was saying, who also have the responsibility to learn. So can you tell me about, one, this resistance to L&D learning, or the desire to learn? I've seen it at large banks, and the inertia to want to learn. And can you also tell me about where you see the connection between education and innovation, or skills and upskilling and reskilling within the innovation vertical?
Okay, traditionally, people start to learn only because they want to take the examination and get a certificate. After they have the certificate, they have the capability to take that job, okay, to be a lawyer, to be a doctor, okay, or to enter to a good school. So this is the way how they were taught. But the new economy, that mechanism won't work well. You can see Google stop considering a university degree is a must, you know, in order to be their leader. So why? Because those skills are not available being engaged in the traditional education system. For example, like me, I'm a fintech professor, but I do not hold a doctorate degree. Even though I have a doctorate degree, what sort of doctorate degree of fintech? Is there a doctorate degree of fintech that are capable to teach the student blockchain, AI, blah, blah, blah? and with the experience in a traditional bank, that they understand the compliance issue, the operational issue, the risk, blah blah blah. No, so there's no such a pillar. So I think, to answer your question, is that in order to keep afloat, you have to be curious again, like a child, okay? Or curious if you are a food lover. You are curious about, you know, how that food is made, and then why you have to you have that funny fragile. If you keep that mind into fintech, like me, so I learned what blockchain is only, I think, 5-6 years ago. Even though I stopped doing my programming for a decade already, but I managed to understand the very basic. So my suggestion is not about how to study or which book you have to read or whatsoever. We have to recreate our curiosity or our creative mindset. So if I love fintech, if I love blockchain, then I can be a good performer. Then for every new piece of blockchain, I will try my best to read it through. Then not only read it through, I will try my best to digest it so that I can teach my student, okay, with good example, with good case. So that's, I think, what stops you is because of the traditional system. The traditional educational system is already outdated, and we have to find a new way to fall in love with what you are going to learn and make good use of it.
Got it. Avril, do you have any thoughts on the connection between skills, upskilling, reskilling, and innovation as it pertains to Hong Kong's financial services industry?
Yeah, I mean, I agree with what Emil said also, but you know, we used to have jobs for life, and you train as a lawyer or an accountant, or you get a job and you could potentially not study ever again and stay in the same job for 20 years.
You cannot.
Now you can. Now things, as we've said, are moving much faster, and you know, technology and digitalization and how things are happening, you have to stay on top of that. And so, and now there is no such thing as, you know, jobs for life. You know, we've got the gig economy and, you know, much more flexible working practices. And so in the future of work is more about, you know, keeping on top and doing things that you love, but, you know, doing not one specific thing for, you know, a great length of time because of all that underwave of change. In Hong Kong, I think it's very traditional still. People still, you know, want to be lawyers or doctors or accountants, and they want to work for the Big Four, or they want to work for a big bank. But thankfully, there have been programs in place like the FinTech Learning at Hong Kong U. There's a FinTech course. And those sorts of programs, and in particular female STEM, encouraging females into STEM subjects and things like that, has made people open up, and education has actually helped, I think, the Hong Kong economy understand that actually you don't have to work for a large, you know, investment bank. You could actually work and have a very successful career with an, you know, with an SME, you know, doing something that you enjoy. And so it's becoming a bit more acceptable. But also I think Hong Kong people are very entrepreneurial. We have more entrepreneurs here than I think, you know, on most in most countries. And I think that also makes Hong Kong very exciting. So if you couple all of that, you know, determination and, you know, traditional education with ongoing learning, then, you know, you have these entrepreneurs and you have a lot of talent and a lot of, you know, new companies and new ideas. So I think Hong Kong is a very good place for that. And I'm quite proud that we have quite an entrepreneurial, you know, younger generation. Some of them, you know, a bit like the fintech that I'm actually helping at the moment, you know, these guys are half my age, and yet they have, you know, fantastic ideas and coming to market with a new application for helping millennials with saving. And so I think, yeah, we have a very vibrant ecosystem in Hong Kong.
Fantastic. And where do you see perhaps an area for improvement and opportunity? I think there are individuals that see upskilling and reskilling as new paths, and then there are also certain players in the financial service industries that don't believe in upskilling or reskilling or see the need per se, or don't want to invest in their people, their skills. I mean, do you see that? And if so, what are your thoughts? You know, L&D is traditionally seen as something that can just be pushed to the next quarter. It's not given much imperative, but then at a certain point, innovation can't happen. And so you end up with these broken business models by not doing the important things. You're doing the urgent things, but not the important things.
Can I answer this first? I think my advice would be that you need to take control of your own destiny. And you may be working, you know, in a financial organization today, and they may or may not have your best interests at heart when it comes to your learning and development. But the world is changing ever so quickly, and nothing is permanent. So if you value, you know, your own self and you want to learn more, then you can take that on yourself. So, you know, when I was been working in organizations, I not only did internal training that was given to me on a plate, but I also looked external and, you know, found ways to improve my skills and looked to improve my own capability outside of my current full-time job. And I think that is going to help people future-proof themselves. So I think you can't really wait for your organization, and you may be lucky to have, you know, or to be in a role where you are at the cutting edge of innovation and your company is supporting that learning process. But if you're not, as most people I expect are, then you need to look external for that source of learning.
Fully agree. Fully agree. Well, but there's some improvement when I was working in the bank. We seldom have the training beyond finance. Okay, maybe languages, 普通话 at that moment, or German, because I work for a German bank. Apart from that, there are not much unrelated to their own business. But now, since I'm teaching providing corporate training. What I found, traditional bank, they start learning fintech. They want their general staff to understand what big data is. They want the staff to understand what data analytics is. So those are general stuff. And also, I also provide talks to the directors of the listed company. So in the past, those classes were not available. What they were taught was just regulations, licensing, all those legal aspects in the past. But now, my classes are being selected by a couple of times that the listed company directors are interested and is eligible to be a CPD these days. So that's an improvement for the multidisciplinary kind of knowledge. In general, Hong Kong has a good development, and I think it's just started. And I think in the near future, since we have too many things happening surrounding Hong Kong, the central bank digital currency in China, the open API in Europe, and all these kind of technology-driven buzzwords are new to the professionals. So I think it's a good sign that we are catching up. It shows on my my clients. So it used to be only banks, but now a properties company and also a legal firm.
Interesting, very interesting. So we're approaching the end of our time together when it comes to the group Q&A, and to all those that are listening, now would be a great time to voice your questions. Thank you, Annie, and thank you, Cliff, for participating so far on the chat. We'll be getting to your questions momentarily. I've got two final questions. The first one is, there are a lot of jobs being automated, decimated by technological forces like artificial intelligence or cryptocurrency or blockchain. in the financial services. So where do you think these technologies are going to attack jobs first?
In Hong Kong.
Which part of the financial service industry is about to see some shaky grounds?
Well, it depends on which part has the full license. So it's driven by the policy. For virtual bank, for example, they can only accept Hong Kong citizen to be their customer. So it's a policy-driven business now. You might be aware that USDT Tether is invented in Hong Kong, but since there's no rule in Hong Kong, so the Hong Kong invented germ become American or become internationalized. So it's all policy-driven.
Got it. But Emil, in your experience with reg tech, fintech, legal tech, insurtech, all those things that have tech written behind it, are there any areas of financial services that you see particularly at risk?
Oh, the tellers, the front desk. I hate it. Every time I've been there, there must be some problem with my ordinary process. So the most hated person, I can see are the teller. And when I walking away, and they also try to hard sell because there's a quota they have to close. So this is the hardest job. I respect them, but the system, those people, they are like Kodak in the film industry. Okay, in the old days, you have to print them out. Eventually, we do not need them. They have to be retrained and go back because of their customer service mindset, because of their, they are very careful. Okay, we have to maintain them, keep them into the industry. Otherwise, when they be a bus driver or whatever dishwasher, it's a waste to the community. So to retrain them so that we can transform them into other service industry will be the most important thing we have to do.
Got it. Avril, what are your thoughts on where jobs are going to be most affected in the very short term, 6, 12, 18 months in Hong Kong?
I agree with Emil. Obviously, the branches, I think with COVID, we can see that banks can operate without us going there. So definitely we're going to see less branches and therefore those jobs will be going. But to be honest, anyone doing a job that can be easily automated will disappear. For me, if you think of any organization that has a bank of desks of people all doing the same thing, they're at risk. So if you look at capital markets over the last 10 years, there used to be trading floors with thousands of people. They're all gone, right? Yeah. So what happened was the different asset classes, they started with equities and slowly they became, electronic. They moved to electronic trading and then things became automated. And I think, if a computer can do what you do more accurately and faster, then you need to reevaluate your career. If you touch paper in your daily life, you need to reevaluate your career. So, in wealth, we've got robo-advisors and, proactive algos, which can communicate to clients much faster, much more efficient. And, if people want human conversation, then you can have video chats with your relationship managers, right? But there'll be a lot less of that, I imagine. And I've had many arguments about this with people because they're like, oh, my high net worth individual wants to see me in person or wants a human. But if you go on the MTR in Hong Kong and look at how many people are talking to each other versus how many people are just staring at their phone, what do you think the younger people want? So, they prefer to interact digitally. So there's your answer. So if your job is human interaction, your job is touching paper, your job can be done faster and better by a computer, then you're in trouble.
Unless you transform it into a very prestige way. So if you are really love your job as a teller, you have to reinvent that job.
Then you need to be one of the few that's doing video chat calls, right? You need to make sure that you're one of those.
The best. Okay. You have to do it, you know.
But you'll be fighting. You'll be fighting because there won't be as many.
Yeah.
Fantastic. Okay, well, my final question before we start to open up to the audience, and again, thank you all for your questions so far. Now would be a great time to have some questions on the chat. Is what are the opportunities, right? We've talked about a lot of the not so great things, but I'd like to end on a slightly more positive note. What are the positive things that will come as a result of companies and financial services industry able to future-proofing themselves? What can they expect if they are able to cross the chasm and make this transition and be ready for the future?
Shall I go first? Or shall I go
Either
first?
of you can begin.
Okay,
Yeah, go for it, Avril. Let's end on a more positive note.
How is it going to be better? Well, I think, you know, if you've been banking in a traditional way the past, 10, 20 years, then the service that you will have received will probably be abysmal. And so by all of this transformation, we can start to see things happening faster, making things easier, and proactive service. So traditionally, the banks have never had to outreach to you to say, oh, don't forget your loan payment is due, or, don't forget, you normally order, this particular thing from us at this time, because they literally wait for you to walk into their branch to request services. So the banks traditionally have operated in a very reactive manner. And with all this data that they now have about us, they can now start providing much more tailored proactive services. So, things will become easier. You will never forget your loan payment. If you suddenly become overdrawn and you didn't know about it, then you will start knowing about these things. And you'll get offers that are tailored to your lifestyle. You won't get loads of junk mail through the post that it doesn't apply to you. And so that will free up a lot of time for you to enjoy your life. And when you go shopping, you'll be offered, buy now, pay later schemes, or, it'll become transparent to you. So you won't need to take the time and say, right, today I need to go to the bank and I need to be there by 9 o'clock. Otherwise there's going to be a big queue. And then, I'm going to have to explain what I want. Banking in the future will become seamless, and you'll just get on with your life. You'll make interactions and your bank will be there to support you and will be able to provide you with notifications so that you never miss out on things. And all of these ecosystems that are developing, partnerships, virtual banks, loyalty schemes, all of that good stuff, you can then start to connect your lifestyle into your banking, and it will just make your life a lot easier, I think.
Yeah, totally agree. But remember, there's one saying, banking is no longer where you go, it's something what you do. So to make seamless banking, the bank will not be the bank, It can be a Starbucks will be the bank. If Starbucks, you have the app of Starbucks. So if open API is there, and the banking is a service, okay, on the cloud. So banking become a day-to-day business. You do not go to the bank. The bank is simply not exist on the surface. The bank is just serve the service partner. So I think in the future, we do banking anytime, anywhere, and wherever there are about risk taking, it is banking. What's bank? What is to undertaking risk, so that in return they get your fee or interest. So that's banking. So if you break everything down to that level, you can see that the bank exists everywhere. But it is not in the form that we are seeing. It will be transformed to the supply chain financing. It will be transformed to the new form of crowdfunding. What I believe is that one participant who is doing this decentralized identity. So we need a centralized identity now to do the KYC/AML, and all the banks suffer because the bank, if they take that risk, they will be fined. If they do not take that risk, there will be no business. So who can make the judgment? They need a decentralized identity verification system. So if the commodity themselves make the judgment, so when something goes wrong, it is not the bank's own fault. So by transferring the risk back to the community, the bank can charge much lower rates and do the job much faster. So I think in the future, the bank will be everywhere. And in order to make it happen, the way how they identify their customer must need some revolution. Otherwise, it won't happen soon. So that's my opinion.
Fantastic. This has been quite an insightful conversation. Thank you so much, Emil and Avril. We've touched on a lot of different things in the span of 45 minutes. I've truly enjoyed our conversation. I know we have a few minutes left for some Q&A. So Annie, Cliff, Rashab, anyone out there who's listening, now would be a great time to voice a couple of questions. I know, Annie, you already asked a few earlier about partnering with fintechs and looking at that as a alternative to licensing. So maybe we could just get started with that. And anyone else who has some questions, just feel free to put it on the chat and I will voice it for you to our panelists. So Annie asks about the build versus buy model for innovation. As Emil, you already mentioned, it's a bit of both. Avril, do you have any thoughts on when companies like JP Morgan, Goldman Sachs should consider buying fintech startups left, right, and center versus, like Emil said, building innovator or accelerator sessions and incubating them within versus looking at licensing to all the SaaS, the platform as a service, the infrastructure as a service, the everything as a service business models out there?
I like it when banks buy the fintechs, to be honest, because it shows that they are willing to take that risk, and also it shows that the fintechs are on the right track. And when they do it in such a way, so JP Morgan have been involved in a data company, I think it was property, and they used it to integrate with their existing property business. So now not only do they offer mortgages, but they also have this extra insight and data that they never had before. So I find it quite exciting when you see those types of acquisitions, but I found it even more exciting when there was a fintech that bought a bank. Now, when you see that happening in the US, then you think, oh, this is interesting. And we're not talking a huge bank, obviously, but still, you know, when a fintech starts buying a bank to get the license and doing like a reverse, you know, bank, then that becomes quite exciting. So I think it's quite nice when that happens. You just got to hope that they have the culture and the ability to, you know, really take advantage of the acquisition and make sure that they leverage it to the full capability and they don't just operate it as a standalone business. So that's when it becomes a bit of a shame. But if you've got, you know, an old traditional bank like JP Morgan, then, you know, it is hard for them to integrate, you know, one acquisition into the whole bank. But when they do it in such a way that it actually benefits one particular area of their banking service, to improve the service they provide their clients, then why not? I think it's great.
Fantastic, fantastic. Rashab is asking about financial services being a pillar for Hong Kong, and a lot of the focus for organizations, and the HKMA has been focused on retail. Rashab is asking, what is going to hold a lot of trade and equity markets robust outside of things like the Ant IPO? In other words, what's going to help keep trade and equity markets robust, especially out of Hong Kong?
I don't know the question exactly, but I would like to share. You know, if you talk about Ant financing, is the majority of
maybe Rashab, do you want to ask directly? I could unmute you and you could ask in a way that would be a bit clearer.
Yeah, I think we focus too much locally in Hong Kong. One point I must bring out: there's no local Hong Kong business. Whatever we do, it is somewhere else. When we drink the water is from China. when we do the eat the meat may be imported from Brazil. So HKMA or whatever regulator, the problem is that because they only overlooking their own area, they are not responsible, for international business. So the problem now about somewhat faster payment system, for example, because their control is only on the money side. And Hong Kong has no GST, so they do not have to care about the merchandise side or the transactional side. So in other places, particularly in Europe, we have VAT, value added tax, very complex. So whenever you do a transaction, you have to put down the particulars, the transaction number, whatsoever, so that it is traceable. So the API in those places carry huge amount of data, so that we can reconcile the bank statement, we can do sales prediction with ease. But in Hong Kong, because the project is only led by HKMA and not by the Consumer Council or not by the other commercial departments, we do not have such an important component on the API. So when we pay somebody, we don't know as a merchant who is paying, when it is paying, why they are paying, and then you cannot match it out. So so that's why go back to this question. HKMA has been focused on retail, but no matter how hard they focus on the retail, it is only a small part of the retail. They have to work closely with the commercial departments, responsible department, to make that full picture afloat. Okay, so that's my
yes. Yeah, no, thanks for sharing. So my specific question, and I think you've covered some of it, was really that there's going to be headwinds, right, and changes because of COVID, global trade, so on and so forth. And given how much focus within financial services in Hong Kong is actually on, as you mentioned, right, the business and the money that's coming, that Hong Kong is actually operating, but to support other markets, right?
That's
the trade. Yeah, that's all it is, right? So what's going to happen in those sectors to kind of make sure that that pillar stays strong? It can't be just some of the initiatives on the retail side. I guess that's
the API cannot be local. The API must connect to China, Europe, and the other places. And we are too shallow now. It's only local API, local policy.
Yes.
And then on the digital world, we need seamless connectivity to our trading partners.
And is that something you are familiar with in terms of HKMA making moves in that direction, or not really?
They have a proof of concept, but the pace is not fast enough.
Okay, thanks so much.
Got it. I think we'll wrap up with one final question. So if no one else has any other questions, my final question is the advice you have for the financial services industry. Both of you are very senior practitioners. We've clearly evidenced that the pace of change is far outpacing what is possible right now. And it is going to be a very rocky ride, not for the short term, but for even the medium term and long term. So for all those people who are fresh grads like Annie, who are about to enter finance and fintech, and for all those who are, I guess, a little bit down the career in financial services, 5, 7, 10 years, and even those who are partners and CEOs, what are your messages to those in the financial services from those that are entering and those who've been veterans?
Shall I go first?
For
me, I would say, if you haven't already got a cloud strategy, then move everything to the cloud as soon as possible. You know, I think relying on legacy data centers, servers, engineers, fat fingers, it's just, you know, it's just not good to be able to operate a decent business model that way. So, you know, migration to cloud should be first and foremost, if not already. And I think it was DBS that said on a panel recently that they have finally turned off their last mainframe, which I was incredibly impressed with. So, you know, it is possible and it is being done. So, you know, let's get on with it. And I think Hong Kong, we've been terrible at doing this. So, you know, cloud first and foremost, and don't even think about buying any hardware, would be my first advice. And also, once you've moved everything to the cloud, then obviously you need to implement some pretty strict and robust cybersecurity measures. So for me, focus on cloud and then make sure that security is not an afterthought. So security needs to be part of your cloud strategy, how you access your data, who has access to your data, where is your data, how is your data backed up, you know, what is your disaster recovery, all of those good things. You know, cybersecurity will become one of the major themes going forward, because as with all the shift to digital comes more threats and risk. So cybersecurity is a must.
Yeah, to me, on top of this, avoid data silos. The first thing you have to do in parallel on the move into cloud is to break the silos. And because if the data are not shareable, then you cannot use AI, you cannot use analytics with ease. I think while you are considering to move to do the planning for cloud computing, focus on the data first and how the data are allocated and being stored, and then how they can share with the security policy, because you got to study the security policy anyhow. So if you are studying it, and usually in the past when I was heading the bank, I only focus on the external security. But now, since the data are being shared, then you have to apply the same to make sure that the data will not be leaked, you know, between systems or between departments. Okay, so I think moving the cloud, review the security policies, and then focus on the data.
Got it. Fantastic. Thank you again, Emil, Avril. This was a phenomenal conversation. I really enjoyed it, and it'd be great if you could just write your email address. And for all those who still have additional questions, I'm sure they'd be happy to reach out to you either on LinkedIn or maybe even your LinkedIn is fine. Just add your LinkedIn, and anyone who's in the audience, if you have more questions for myself on how companies like Accelerate are helping financial services industry stay ahead, you know, feel free to reach out to myself. If you have specific questions to Emil or Avril, or yeah, just Google them. They're pretty famous in Hong Kong, so I'm sure you'll find them right away. And thank you again to the audience. Thank you for your questions. It's a very interesting time that we live in, and we're very, very excited to see how the future of the financial services industry will pan out. So thank you again to everyone. A copy of this will be recorded and put on our YouTube channel if you want to watch it again. And I wish you all a wonderful, wonderful afternoon ahead. Thank you.
Thank you.